For these markets, Thomas Hayes joins me now. And Thomas, okay, so we had a bit of a sell-off yesterday, but do you have any concerns about losing any momentum going into 2025?
Well, Ash, have no fear. The broadening rally will reappear. I think we saw a similar situation in 2016, right after Donald Trump was elected the first time. You saw some volatility in November, December. The dollar rallied, yields rallied. But shortly right after the turn of the calendar and after the inauguration, everything fell into place. And if you keep it in mind, earnings growth, price is what you pay, value is what you get. The Magnificent Seven, while they're going to grow earnings 21% next year, that is down from 33% this year. Whereas if you look at some of the broadening, look at small caps, for instance, they're also going to grow earnings 21%, except that is up from 8% this year. So one, you're paying 33 times earnings, one, you're paying 15 times earnings. Price is what you pay, value is what you get. So that broadening rally that started in July, we're going to see a continuation of that in 2025, despite the abrupt interruption in December. Expect that trend to resume after the calendar turns, Ash.
Yeah. The Santa rally has been a big belly flop, has it not? I've got 1 minute left, Thomas. A record $1 trillion was invested into ETFs this year. Do you expect that trend to continue?
Well, the last peak of passive ETFs inflows was 2021, which implies it often happens at the exact wrong time. I think what you're going to see is the weights that make up those passive indices are going to underperform the Mag 7 versus the rest of the market broadening start to outperform. As a matter of fact, value has outperformed growth by 4.4% per year since 1927. The only exception, which is why we're stuck with recency bias, the only exception was the zero interest rate policy decade since 2010. So unless you believe we're going back to zero interest rate policy, you want to add some cheaper value into your portfolio as the calendar turns, Ash.
Terrific advice. We'll have to leave it there. But Thomas, thank you so much for joining us today.
Thanks for having me.